business news. Quite a different subject. Stephen Carroll, thanks for being with us for that. You're going to be starting us off with some techie goodies at the Mobile World Congress in Barcelona.
Yeah, that's right. Mark Zuckerberg, one of the key speakers at the Mobile World Congress from Facebook, of course. He used his opportunity to defend the price that his company paid for WhatsApp, the mobile messaging service. Facebook announced last week it was buying WhatsApp for $19 billion, a price that surprised many people, it has to be said. Zuckerberg said that he plans to leave the service unchanged, although the company itself did say it would be launching a voice call service later this year. He said that it was a valuable partner for Facebook and worth the money they're paying.
I actually just think that by itself it's worth more than $19 billion. I mean, it's hard to exactly make that case today because they have so little revenue compared to that number. But I mean, the reality is there are very few services that reach 1 billion people in the world. They're all incredibly valuable, much more valuable than that. So I mean, there's a chance.
And they're halfway there already.
I could be wrong.
Mark Zuckerberg speaking there in Barcelona. Stephen, I understand you've got a few more technology stories for us.
Yeah, we're going to start with the Chinese version of Twitter, Weibo, which has announced it's turned an operating profit for the first time in its history. The chairman of its parent company, Sina, says it earned an operating profit of $3 million in the fourth quarter. Sina as a whole saw profits jump to over $44 million, helped by a massive jump in advertising revenues from Weibo. Sina says Weibo has some 500 million users worldwide. And staying in China, LinkedIn has launched a Chinese language version of its professional networking site. The company says it will cooperate with strict censorship laws in China and so won't allow users to take part in group discussions. CEO Jeff Weiner says the company is targeting 140 million Chinese users and pledged to be transparent about the restrictions on its service. And one of the world's largest sites for buying and selling bitcoins has gone offline. Earlier this month, Mt. Gox stopped all withdrawals after uncovering the theft of over 700,000 bitcoins from its servers, worth more than $300 million at current value. It's a blow for the virtual currency, though, which has been struggling to assure users of its stability.
I have to say, Stephen, I still don't entirely understand what a Bitcoin is. But
it's sort of like using regular currency, except that nobody regulates it and you buy and sell it online. So you never actually get anything into your hand for it.
Okay, it's maybe a little bit too much for me. Something I do understand a bit better, though, is the markets. It was quite a good day for the markets yesterday. How are things looking today? Not
such an optimistic start here in Europe, it has to be said, after those near 10 or over 10-year highs that we saw in the FTSE in London and Paris's CAC 40 yesterday. Here in Paris, shares in the French media and telecoms giant Vivendi opened down 1.6% after it said it had taken a €2 billion write-down from its mobile phone operator SFR. Bad news in the construction sector here in France as well. New home building fell by 18% according to official figures to November and January. A quick word on Germany as well. Its DAX in the negative territory. That's despite news that its public accounts have returned to a surplus last year. Over in Asia, the positive lead from Wall Street helping things in most places. The exception, of course, being Shanghai. Their shares down over 2%. This over continuing jitters on about the Chinese property market.
OK, here in France, a story about something that kind of tends to make people quite angry, quite understandably. A new law is going to make it more difficult for companies to close profitable factories.
Yeah, this came about after the very controversial closure of part of the steelmaker ArcelorMittal's plant in Florange in eastern France. Now, François Hollande visited the site during his election campaign. He promised to change the rules to make it more difficult for companies to close profitable sites. But there has been much criticism of this law, that it's stifling job creation. Catherine Viette has more.
February 2012, François Hollande is in full campaign mode. He's at ArcelorMittal's Florange plant to support workers trying to prevent its closure.
When a major company doesn't want to keep a plant open or sell it, we'll force them to stay open or find a buyer.
A campaign promise that's finally been realized after MPs passed the Florange law.
It's a real solution against healthy companies firing people.
The law affects companies with more than 1,000 workers. If management decides to close a profitable company, they must actively seek a new buyer. Failure to do so will result in a fine amounting to €28,000 per job lost. Conservative UMP politicians voted against the measure.
The economy has to remain fluid. When you put the brakes on, in this case when a company is sold to another owner, it doesn't help job creation.
The law has attracted criticism from both sides of the fierce debate over industrial policy in the country. Employers groups say the law contradicts Hollande's pledge to be more business-friendly, while trade unions say it does not go far enough to protect French workers.
Okay, thanks very much, Stephen Carroll, for bringing us the business news. We are going to switch our attention to the